Hello everyone, welcome back to another live stream in my channel. So, thank you so much for the support I've received lately in my videos and everything. This is I20 and welcome to Selena Trading Moves. Here we analyze everything about the market stock, from stocks, fundamentals, and everything about markets that you can think of. So, today is a very big crazy day where stocks are going. So yesterday, this was from yesterday, sorry, except for oil. So yesterday was a key day because most stocks went up aiming um for a ceasefire to happen. Something that won't happen because Iran simply denied and rejected the plan. So again, it's another story every day. These days the market has become crazy. We have lost control of the market and everything is becoming dramatic. So every day the market just gives us new and new insights because the situation is all over control. We cannot control the situation anymore because, as you can see here, one day it's Iran agreeing, one day it's not, one day this Iran just made up their mind to agree. And we see something that's gonna happen, but then it goes up again. And it's all made by our daddy Trump. So this is US futures. The market has been falling today. This is Thursday. We started the day here. We kicked off the day at 1 a.m. So this is 1 a.m. European time, okay? 12 a.m. European time. So this could be 12 a.m. Um, no, this is 11 a.m. Okay, wait. So 7 hours ago at 5. So this is the opening of the market at Asian session. No, Asian session starts here. No, where is Asian session starts? 8, which is 1 a.m. Okay, 1 a.m. So that's the start of the Asian session, and we started at 6,628, and we went down to 6,588. Not much of a downward, but it says a lot about the market, okay? So this says a lot about today's market. As you can see here, we have a red candle, okay, for the futures market. Also, if you go to NQ, we go to Nasdaq futures, same thing. The market has been falling yesterday. So S&P 500 and all the major stocks has been falling today. And this is all because good morning, Ali. Good morning. How you doing? So futures are falling and the US oil is going up once again. So we are at this consolidation level as I showed you guys before. So this market is mainly driven by drama. It's all dramatic in today's market conditions. So as you guys can see here, we have a market that's very dramatic. That's like dealing with a girl that needs princess treatment. Our great guy Donald J. Trump is actually just playing with the market. So we're seeing manipulation happening all over this place. Hey, I've been waiting for this one. Thank you so much, Suki. Thank you. Welcome once again. So as I said, this market is all driven by crazy and dramatic stuff. So as you guys can see, we have no way to actually end this war, which means the market is at risk. And as I said, the situation is so tough, it's so unclear. So as you can see here, US stocks futures fall as Iran rules out direct ceasefire talks. Iran wants no ceasefire talks. Earlier on Thursday, after Iran said it is reviewing a ceasefire proposal from Washington to end the conflict in the Middle East, but had no intention of engaging in direct talks. Futures were muted after a choppy, albeit positive session on Wall Street as markets welcomed reports that Washington had proposed a 15-point ceasefire plan to Iran, which, if you look into, is actually crazy. So the plan is just benefiting the US and not Iran at all. We have a review and the ceasefire proposal from the US, said media showed late Wednesday, but has no intention of holding direct talks to end the conflict. Speaking on state television, the foreign minister signaled some openness to negotiate if Tehran's demands were met, which is every ship has to pay 2 million US dollars if they want to pass and lift all sanctions and keep the nuclear program in. So, in order the messages through mediators, the dialogue negotiations were in progress. Iraq also largely ruled out any plans for direct talks with Washington. His comments come after reports showed the US had presented a 15-point plan to end the war with Iran, but Iran had initially rejected the plan and had also put forward its own 5-point proposal for a ceasefire. So, this had made the Wall Street and below session highs on mixed Iran signals. So we have mixed signals. Feels like something about to move. Of course, Ifat, of course. Yes, because honestly, I don't know what to do today. It feels confusing, guys. Yes, I understand. I understand what you feel. Today's market is crazy. And trust me, all of what you see green here will turn red in seconds. So today's market is not to trade, except if you want to go short, okay? But the craziest thing in the story is that Trump is actually faking it up. Trump says Iranian negotiators are begging for peace deal. Like can this even be true? President Donald J. Trump has said Iranian negotiators have been very different and strange. Other than Taiwan is begging the US to make a deal to end the almost month-old conflict in the Middle East. In a social media post on Thursday morning, Trump said Iran should be trying to reach an accord with Washington and reiterated recent White House claims that Tehran's military capacity has been obliterated by joint US-Israeli strikes. They better get serious soon before it is too late, because once that happens, there is no turning back, and it won't be pretty, Trump wrote. Iran is reportedly viewing a 15-point peace proposal from the US, although the White House has warned that more airstrikes will pummel the country should it not make a deal. White House Press Secretary Caroline Leavitt said Trump does a bluff and is prepared to unleash hell if Iran doesn't accept. So Iran put a signal that it had no intention of directly negotiating with the US, while Iran also proposed its own five-plan that involves reparation from the US and the toll system in the vital Strait of Hormuz waterway. So, the Iranian leaders basically rejected any signal of a ceasefire. They just want to make deal. That's actually crazy. So both of them are actually trying to get in a deal that no one else can agree on, okay? So few seconds before the market opens, then we're going to see this turn more green and all of this more red. So we have to expect this to happen in few seconds. So here, for example, so we're in the market open now, and let's see what's happening now, okay? So there's still no move in all the major, yes, green for stocks. Stock exchange green, waiting for the indexes to turn green also. And they're all turning green today. As I told you, well, red. They're all turning red today, okay? It was pretty obvious, but Nasdaq opening with a 1% already is kinda bad. It is kinda bad, okay? So after closing at 24,137, Nasdaq is opening way too low at 23,890. Same thing for S&P and for the DGI. So all the major indexes are putting on a no, while we see oil being down on the last hour, but we're going to see what's going to happen next. Brent back above 100 a barrel as US-Iran negotiation prospects remain uncertain. Of course, they will remain uncertain, and of course, there would be no way to end this war as of these days. Today, we're actually the most cautious we should be. I mean, just look at it. Everything is red already. As I told you, I was expecting everything to run as soon as market opens. So these days, you just shouldn't go on a trade, okay? So oil prices climbed again. Oil prices jumped on Thursday amid conflicting remarks around de-escalation in the Middle East, while Iran reviewed a U.S. proposal to end the war. The futures contract expiring in May for Brent crude, the global benchmark, had risen 4% to $106. So we can see no great improvement for this war because it's still not really clear. So as I said, if you guys actually don't want to trade it all, don't want to risk it off, don't just go and enter in any position you find in front of you, because in the end you will just lose your money. So please stay cautious, be don't be aggressive, and remain really attentive, because any small mistake and you are gone. So as I'm telling you guys, don't just go and risk it off, because that is going to be one of the worst decisions you will make today. So if you guys got more questions, please let me know in the comment section, because as you see, we are still live here. And if you guys got any questions, please let me know in the comment section. We are still on live, and yes. So here, the opening was so red for all the major stocks, and of course green. If you say red for stocks, that means it's green for oil. So oil climbs amidst mixed signals over US-Iran talks. Oil prices rise more than 2.5% amid contradictory messages from the US and Iran over ceasefire talks and concerns over protracted fighting and disruption to energy flows. Brent crude is up 2.8% to 99.99 a barrel, while WTI rises 2.9%. So this isn't the type of market you should be trading in, because that is going to be one of the worst and baddest decisions you will be making. So right now, you should focus more on trying to find a solution for this market, because as you see here, all the big straits are closed. It has also threatened to close Bab el-Mandeb Strait, a narrow passageway that controls sea traffic towards the Suez Canal and handles around 12% of global seaborne oil. Traders are closely monitoring diplomatic developments, with talk to end the conflicts possibly beginning in Pakistan as early as this weekend. So, as I said, the situation is indeed the worst it has been, and we don't see any potential improvement for the situation. Like, as long as we don't see ceasefires signed by both presidents, there is no way this war is going to end. So as you can see here, of course, Wall Street opens lower, oil jumps as Iran peace hopes dissipate. Stock futures slid on Thursday while oil prices climbed as fighting raged on in the Middle East, despite reports of the prospect of peace negotiations between the US and Iran. We should be monitoring the situation more, because any small mistakes can take us to worse and worse um, results. You can see results. So Trump said Iran is begging for a peace deal, while we don't really see them trying to build a peace deal. So both countries are actually just against each other. So Yemen's Houthis are ready to join Iran war if needed, raising new shipping risk. And that's not the end of the story then. Yemen's Iran-aligned Houthi movement, whose attacks on the Red Sea caused international shipping and trade chaos during the Gaza war, stands ready to strike the key waterway again in solidarity with Tehran. One Houthi leader told Reuters a move that would deepen a global oil and economic crisis brought on by the Middle East war. If the Houthis open a new front in the conflict, one obvious target would be Bab el-Mandeb, which is a small strait where all the important stuff goes from. So we would just deepen the situation more and more, and we would find no way to actually uh, try to make it better. So this is one of the worst thing we can be expecting now right now, because yes, the situation is worse and it's becoming more bad because we don't actually see any improvement here, okay? So it's just becoming worse in this market, and there's no real improvement to it. And that's why I'm telling everyone, please don't just go and invest in whatever thing you find in front of you in the market. Okay, so enough of fundamentals for the moment. Let's go back to market and see what Sifat is asking. With Tesla announcing that new chip factory, does this actually change the long-term story or just short-term hype? Well, that's a good question, and we gotta see, okay? That's a good question. I have to think about it. So, the terafab, okay. Well, that's an interesting one because let's go to Tesla first, okay? Let's go to the chart so we can really analyze it. Well, this is the chart here. And to answer your question, I would say it matters long term, but not in the way the market is reacting right now because it's mostly narrative flow. So let's break it down cleanly. The chip factory you're referring to is actually the 12-fab chip factory, not chips literally. So it will produce chips for self-driving, Optimus robots, and AI in data centers. Tesla just wants to control its own compute supply. We either weld it or we don't have the chips. That's what Musk said. And this checks every bull narrative box from AI exposure, vertical integration, and massive TAM expansion. And that's why the stock popped 3 to 4% on announcement. In the current market, narrative is about the fundamentals. So, in long-term impact, Tesla has been moving forward toward AI company emphasis on Dojo, robotics like Optimus, and full vertical integration. And this factory reinforces that direction. So, structurally, yes, it's aligned with the long-term story, but execution risk is huge. And this is where hype versus reality splits hard. Semiconductor fabs are insanely difficult. The cost is from 20 to 45 billion US dollars, and it's likely to be operational in 2028. And Tesla has zero experience running fabs. And this is not like building a gigafactory. This is competing with TSMC and Samsung level complexity. It doesn't change near-term earnings though because there's no revenue impact for years, and no margin impact yet, and no deliveries impacted. So fundamentally, there's nothing that's going to change in the next 12 to 24 months. So in long term, it should be bullish. If Tesla makes if executed, this would make Tesla less dependent on NVDA, and it would strengthen AI plus robotics thesis. On short term, it's mostly hype and narrative driven. There's no cash flow impact, and there's a high probability of delays or scale-up issues. So, Tesla is trying to become an AI infrastructure plus robotics company, and not just a car company. That is the real bet because they've just found out cars alone are not enough in today's economy and they should build something more and more helping them. So I'll move on to the next question. Leos asks, if NVIDIA is using key levels, does that weaken the internet? So if NVIDIA is using the key levels, does that weaken the entire trade? That's a great question. That's a great question, Leon. Let's move on to the chart first to see what's really happening here. So key levels. I forgot one, by the way. Let me have it outlined first. Then I'm going back to your question. Okay. Well, I would say not necessarily, but it changes the quality of the trade, and you need to trade it differently. If prices react to key levels like support, tier, and resistance, and the move is driven by news and narrative, does that make the level less reliable? Well, it depends on who is in control. If technicals are in control, levels are clean, respect is tight, the volume is normal, and the moves are also structured. In this case, the levels are valid and the trade is high quality. If the narrative is in control, levels just get messy, and this is what you're seeing now. Headlines bring in fast money, retail plus momentum trades pile in, and also algos chase sentiment. So what happens to levels? You have fake breakouts happening, shallow pullbacks, and wicks through support and resistance. So levels don't stop working; they just stop to become less precise. So instead of thinking this exact level holds, like, oh yeah, this level is a good rejection zone, you should think this area matters, but expect noise. Does it weaken the trade? If you trade in this way, then yes. Tight stops means you're getting wigged out, waiting for the perfect retest. It will never come. And you will get streamroll if you're fading breakout. But you adapt. That would make your trade less weak. Why? Because you give levels more room, you use zones, not lines, wait for confirmation, and you respect the momentum. So when narrative is strong, levels become reaction points and not reversal points, as you know. So it means price will react there, but not necessarily reverse cleanly. Let's say, for example, Tesla hits resistance, okay? So we go to Tesla, okay? So we had this level here, he goes above 500 or 468 or something. In the old market, that's going to be clean rejection and short works in this situation. But in the current market conditions, it breaks, it pull back slightly, and may rip again, okay? So the better trade now is breakout plus continuation and not first touch rejection. So you should think losing control, technicals, or narratives. That's a good question. PLTR is still looking expensive. Are people still buying fundamentals or just monumental? Wow, okay, that's a great question. That's one of my favorite stocks right now, which is PLTR, Palantir Technologies. Okay, we've got this great zone. My favorite. I made so much money these days from this zone. So you're basically staring at the core of the market, okay? It's both. Narrative is in control, and fundamentals are being stretched to justify it. Let me break it down clearly. First of all, why does it look like fundamentals don't matter? On paper, you're right, you have forward P 100 versus 20 for the market. So let's say fair price value is closer to 150, and valuation implies 25 to 40% growth percentage for a decade. So it means the stock is priced for perfection. In a normal market, that gets sold hard. So why are people still buying Palantir even though we're at those levels? Because they're not buying current fundamentals, they're buying future category winner. AI infrastructure, defense plus geopolitics, and government contract. So Palantir is being priced like this could be one of the 3 to 5 most important AI companies. And that's why multiples look insane. So look at what's happening. For example, we have war and geopolitical tension. That's great demand for defense AI. A stock that if you had been here, I think 2 days ago, we have analyzed the crazy stock that went up by 2000% just because they use defense AI. Okay, so that's an example. Then you have massive programs like missile defense systems and expansion of AI into governments and military. And that's where Palantir is sitting right into the middle of all of this. So recent news literally shows potential billions in defense contracts and becoming core to Pentagon systems. So the market says you don't care what it earns today, this could dominate tomorrow. And this is where people get it wrong. It's not fundamentals versus narratives. It's narrative pulling future fundamentals forward. For example, if you see strong revenue growth, real cash flow, and government mode. And I mean, I saw a post on Reddit, like the Reddit investors just point out, valuation is the only argument left. So the basis is legit, and the price is the way ahead. So right now, I see that there's pure height. But I think after 2026, we'll have great valuation that's narrative driven. And you can see the stock going up on headlines, but still drop 10-20% randomly. So if you ask me again, why are people buying fundamentals? Are people buying fundamentals or just momentum? I would say we have a credible narrative backed by a real fundamentals, but priced way ahead of reality. So the key insight is stocks like Palantir don't top because valuation is too high. They top when the narrative stops getting stronger. Okay? So thank you for your great question. I have great people in my live stream. That's why I love you guys. I keep doing this every day because the questions you keep asking me are great. Okay? So next question I move to Jimmy. Jimmy said I didn't buy SMCI at the highs when I picked some. So Jimmy says, I didn't buy SMCI at the highs, but I picked some after the drop. Is this a bounce or still risky? Okay. Okay, Mr. Jimmy, thank you for your question. And super microcomputer. Crazy stocks, guys. I don't know what you guys even break this. Market cap of 14 billion. For fuck's sake, what are you doing here, Jimmy? Get away. Well, what caused the drop? SMCI didn't just pull back, it got hit by accounting. And I just went through the files. There's like reporting concerns and questions about sustainability of growth. So it's not clean technical correction, it's a confidence hit. It's a sharp bounce hit by short covers and dip fires and usually fails at resistance. And this is the base case until proven otherwise. So as I said, DJI is the only one getting back here. So DJI is getting at the older levels. They're going up now. So Nasdaq is same thing. Oh, Dia, welcome, my guy, Dia. Welcome. Thank you so much for joining again. Welcome. It's been a while. It's been a while. So as I said, you can see for Dow Jones, actually, we're reaching back the green level here, okay? So 0.01 and 0.00. So we have 0.0 here, and Dow Jones is back at its opening levels. So we check if there's any new stuff coming out. So if you got any questions for me, please let me know in the comment section. First of all, we go through the news and see economic calendar of the day. Saturday is a normal day for the office, okay? So normal day in in the FOMC. That's great. I think it's a normal day here. Even though life is not normal right now, but thank God. Okay, so next we're going to be to check in on Reuters, okay? So I've been checking on Reuters Finance, and as you can see here, uh, President Donald Trump want Iran to get serious about a deal to end nearly 4 weeks of fighting after its foreign minister said Tehran was reviewing the US proposal, but that there were no talks on winding down the war. So how is it currently occupying? Mm, okay, so I have massive news here for Donetsk. Yeah, so the situation in the world is cooked, guys, okay? So the world is cooked. But great news, great news, great news. Donald Trump is still alive, by the way. And he's in Washington jerking off. So, um, the situation is good. We see no bad stuff. As long as he's okay and he's jerking off in Washington, we should be feeling okay. So, if you guys have any more questions, you can just let me know in the comment section, okay? So he's fine, he's great, and he has no problems. That's officially confirmed by Wall Street and also by Reuters. So for us about Tabon, he's also okay, he's safe and sound in Algeria, so he's also jerking off and he's still alive. So these are massive, massive news that would potentially shift the market to a green level, okay? So those are breaking news, and we are all waiting to see if these are confirmed. So it's confirmed for Donald Trump and also for big Netanyahu, baby Netanyahu. It's confirmed, and we are still waiting if there's any new updates. And I will keep informing you guys if there's any new updates because these are massive news for the financial market, okay? So thank you so much for your attention to this matter. As Donald Trump always says, we move on to the next question by I'll take the Stefan's first MCs. Oh, okay. Here's a good one. Here's a good one. His stocks are going kind of bad. He's not jerking off, so his stocks aren't doing very good. And his health is not that good. So pending official information, um, his stock is going down. We should wait until it goes down much when he is about to perform the outperform. Then you can buy his stock before it goes green again. So I move on to the question of my dear Nali. I built Meta during the run up. Does this incentive plan actually matter for the stock? That's a great question. That's one of the questions you find once a day. Thank you so much, Sifat, for this. Oh, Nili, for this question, we move on to the Meta chart first, okay? Meta platforms. Well, The insensitive player matters for the long-term story, but it doesn't justify the current run-up by itself. Right now, it's more narrative than few fundamental driver. So, for Meta platform, we have massive stock options for top XX. Only payout if Meta hits 9 trillion valuation by 2031, and you're still at 1.47 trillions now, which is very, very far from the levels we're looking for. So, this is not a bonus plan. This is a win the race or get nothing bad. So we have three signals. First one is external ambition. Meta has basically said we're aiming to be the dominant AI platform. And that's a bullish for narrative. We have talent war signals. AI engineers equal the new oil. And Meta is locking in top leadership with a huge upside. Markets reads this as they're serious about competing with OpenAI, Google, or even NVDA. And except only when his stock massively goes up, so incentive is aligned with other shareholders. And this is just another Elon Musk Tesla playbook. But here's the part most people miss. This does not increase revenue today, no margins, no change at business fundamentals. It's not earnings accretive. And once again, it matters same as Tesla on the long term because you have it keeps key people, it reinforces the AI pivot, and it signals Meta is going all in. But in the short term, it's mostly narrative amplification. Stock was already running, and it has an AI theme already strong. So this just adds to what if Meta becomes a $9 trillion company. That's just a story, but not earnings expansion. So the plan does matter structurally, but it's not the reason the stock is up. It's fuel on an already strong narrative fire. You didn't just buy Meta, you bought the relief that Meta becomes a dominant AI company. So we move on to the next question. Are institutions actually buying this? Or is it just mostly retail? That's a great question because in today's market conditions, it's hard to believe who is actually going all in, who's buying. Who's supporting the market and that's going down as bad as it can. And there should be something behind it. TGI is back to the open levels. And this is where to answer your question. So to answer your question, I would say mostly uh institutions are still control of the trend. But retail and fast money are driving the feel of the market. So what you're seeing is a mixed regime, not one or the other. Think of it like this. So institutions are the engine. There's pension funds, hedge funds, and asset managers. They control the majority of capital and decide asset allocation and sector exposure. They are the ones creating the direction. But for retail and momentum, they react to headlines like AI, war, and macro. They chase breakouts and they buy dips aggressively. And they create the speed and exaggeration. So retails are just going all in and crazy stuff, but the smart money is the one actually driving the market to where they want to. And yes, we're in a narrative supported institutional market, not pure retail mania and not pure fundamental grind. Okay? It's institutions believe in the AI story and the retails of fast money just go and amplify it. So you wouldn't if institutions are still involved, you wouldn't have NVDA holding high valuations, Microsoft gliding higher, and Meta breaking out. It's this if this was just retail alone cannot sustain trillion-dollar moves, okay? So what changed versus the normal markets? First of all, institutions themselves are now more narrative driven, more benchmark chasing, and more afraid of missing AI. So even smart money is less valuation sensitive than usual. And that's why things feel stretched. It's not retails versus institutions. It's everyone is leaning into the same narrative at the same time. So why is this trend keep on going? Because institutions are still allocating, passive flows keep buying, and AI is dominant theme, and the dips just get bought. So it feels unstable because it's crowded positioning, momentum chasing, and headlines moving price faster. And we have sharp moves, fake outs, and overextensions. So the key insight is market don't top when retail buys. They top when institutions stop needing to buy. So the real question to ask is this retail driven? What you should ask are institutions still adding or starting to distribute? A simple way to read it in real time. We should say, I have a bullish regime, like tips getting bought faster, leaders holding highs, and the bad news getting ignored. And institutions are still supporting this. So, once the transition, we have bigger swings, good news to make that give us weaker reactions, which means earlier distributions. So, it's not a retail only market and it's still institutionally driven, but heavily narrative accelerated. So I'll be back soon, guys. Please stay with me here and I'll be back in 2 minutes. Thank you. Yes. So that's our subject. As I said, we're not at a crazy level, okay? Back to our subject. We are not on a retail only market. And this makes us in a very, very critical situation because the market is driven in a crazy way and we have no way to actually understand if the market is actually going up or going down, and we should wait. And we can wait until we see a market that's actually less risky and more normal, okay? So Hong Kong's import went down and also their export went way too down. But the trade balance still went up. How is this even possible? No idea. Yes, no idea. Yeah. So, as I said here, we'll go back to another subject, which is here we should check if you have any new latest news. So, I think Trump is basically influencing and manipulating the market, okay? That's how I see it. He's just doing the same thing over and over again. He's just making the stock go up and down wherever he wants. So almost Asian currencies were margin muted on Thursday, while the US dollar held firm as investors weighed mixed signals over efforts to end the Middle East war. The US dollar index traded flat during Asian hours after two sessions of gains, supported by safe haven demand. The US dollar index also traded largely unchanged as of 4 a.m. GMT. So Iran weighs US peace proposal and denies talks to end the war. It was reviewing the US proposal aimed at ending hostilities with mixed signals on whether negotiations will progress, keeping investors cautious. And we should all be cautious because Iran in the end will be actually rejecting the plan because it has stopped short of outright rejection, raising cautious hopes of a potential path toward de-escalation. It has publicly denied direct negotiations with Washington and indicated that key differences persist. The lack of clarity has kept traders on edge, with oil markets subdued on Thursday. So the problem is it has been up on Monday, down on Tuesday, up on Monday again, and today it's actually mixed. It's down, but it's started down because I don't know why the situation is a bit unclear. So the price is back to their normal kind of level at the opening time. So the real is a good thing for the US in the absence of credible de-escalation and normalization of energy flows through the Strait of Hormuz. Elevated oil prices and higher US yields are likely to keep USD supported, while oil importing Asian currencies remain vulnerable. An analyst said in a note. Indeed, Brent prices remain above 100 USD per barrel. So, Goldman Sachs analysts have assessed the impact of recent oil prices increases on the US labor market, finding that higher oil prices will reduce payroll growth by approximately 10,000 jobs per month through the end of 2026. The investment bank used oil supply shock measurements to evaluate how rising oil prices affect employment and unemployment in the US. The analysis reveals that while high oil prices continue to reduce job growth and increase unemployment, the impact is roughly one-third smaller than it was during 1975-1999. This reduced sensitivity likely stems from lower oil intensity in US GDP and the growth in domestic shale production. Goldman Sachs estimates align with projections from the Fed Reserve and academic research based on the firm's baseline oil price forecast is expected to raise the unemployment rate. So, US futures stock futures fall as Iran rolls out direct ceasefire talks. Yes, that was obvious. So, there is no ceasefire happening between both countries, and this would push us to higher highs again. Stocks and bonds skinned as Iran crisis reignites oil price surge. Stock and bond markets fell on Thursday as oil surged more than 5%, with Iran's denial of any talks. So, conflicting signals over the scope of contact, plus reports of thousands of US troops being sent to the region. It's now the 3-day rebound in world stocks and related selling in global debt markets. After falls in Asia, While the Philippines had an unscheduled central bank meeting due to the turmoil, European stocks and government bonds price dropped as Germany's central bank said LCB rate increase next month was an option. So it was now likely to hike rates this year too. President Trump is telling Iran to get serious about a ceasefire. So oil and European natural gas prices jump more than 5% respectively. So he said you either get serious or you're going to see how. So let's see some questions here. So with the market's reaction to headlines like this, is it better to stay out for now? With the market reacting to headlines like this, is it better to stay out for now? That's a great question asked by Nali. Okay, so that's very interesting. Thank you so much for your question. I really appreciate it. And yes, let me answer your question. You don't have to stay out, but you do have to change how you play it. It's no trade. It isn't a no trade market. It's a precision, headline driven market. News moves price fast, like AI, geopolitics, and policy. These events get overshot and then reclaimed. It moves extend further than expected. So it does feel random, but it's actually momentum plus narrative, bigger than clean structure. So should you say out? Yes. You rely on tight cyclical entries and you get shoved easily. You're unsure who is in control, is it buyers or sellers? And then stepping back is smart, it's not weak. So you can still trade if you adapt to the environment, you accept this position, and you focus on confirmation, not prediction. So the real shift you need to make is not the old approach. You shouldn't be like, oh, this is perfect level, means instant entry, or you have tight stops or fading first moves. You should wait for reaction after the headline, trade continuation of failure, and not the initial spike because you can go back anytime. And give trades more room. And especially, don't trade the first move. If headlines drops, the market spikes, and let it cycle. Then look for reclaim, continuation, or failure. Focus on strong names only like NVDA and Meta because they recover fast and they respect structure better. Also, you don't need to catch the whole move. Partial participation is enough in this market because catching the middle is safer than catching the bottom. Sit out when it's so clear. And this is really underrated because we like taking adventure and risky trades. If you think I don't trust this move, that's already your answer. And the real danger is not missing trades, it's forcing trades in a market that doesn't match your style. The mindset shift is instead of asking should I be in or out, you should ask is there really a clean setup after all this noise? You don't need to just fully stay out, but you should be more selective and reactive. If it feels messy, maybe sit out or just reduce your size. Just wait, confirm, and then act. That was before. This is what you should do now. Is that guess and react, guess and hope. So, I bought GME. The next question is, I bought GME during the hype. Does it still have trading value or just sentiment now? Wow, that's a good question. And with GameStop, let's check their stock by the way. GME, GameStop Corporation. You guys love crazy stocks. You guys love it. So it still has trading value, but it's almost entirely sentiment driven and not fundamentals. It is a growth story or a narrative, nor institutional core holding. It is a sentiment plus liquidity plus position in stock. So does it have value? I already answered that question. MSCR and Bitcoin already answered that question yesterday. You can check out yesterday's live stream. So they can then moving together at the same time. No. So this is actually a great article. Let's read it together. Why higher oil prices are no longer giving Tesla stock a boost. Tesla stock was down early Thursday, while oil prices rose again, following Iran rejection of America's conditions to end the war. That's odd. In the past, Tesla stock got a boost from higher oil prices. Shares of the electric vehicle maker were down 1.3% in pre-market traded at 381 US dollars, while S&P 500 and Dow Jones Industrial Average futures were down 0.6, 0.5% respectively. Coming into Thursday trading, shares were down 40% this year and up 34% over the past 12 months. Shares were also down about 4% since the start of fighting in Iran. Similar to the S&P 500's decline, despite higher oil prices that in the past have prompted more car buyers to consider EVs. All things being equal, electricity from home is cheaper than gas from a pump. A Tesla Model Y might take about $10 of electricity delivered from someone's home to drive 250 miles. That might be $30 of gasoline for a similar car at current prices. Despite the conflict which has roiled the energy markets with the Hormuz trade close, gasoline prices are down about 25% since peaks reached in 2022. Retail electricity prices are up about 30% over the same span. Back then, the EV versus gasoline gap may have been closer to $30 to drive 250 miles, rather than today's $20 gap. So, the outlook for EV sales growth in 2020 was also much better. Americans bought 1.2 billion electric cars in 2023, up from about 813,000 in 2023. Tesla's US sales jumped to 655,000 in 2023, up from 520,022. So even if Tesla is actually an electricity based vehicle, which we would think basically, yeah, eventually it would go up because oil is much more expensive. But that's not the situation anymore because it has changed, okay? So that's a new trend uploaded 7 minutes ago. Wall Street slides. unmet is de-escalation uncertainty. Wall Street's May indexes dropped on Thursday following gains in the previous session, as investors remained cautious about developments in the Middle East while weighing the prospects for de-escalation in the conflict. US President Donald J. Trump said Iran was desperate to make a deal to end the fighting and urged Tehran to get serious about a deal. Iran's testing agency said Tehran had officially responded to the US 15-point proposal, citing sources with knowledge. Iran had denied any negotiations with the US in public. Contradictory signals from both sides left markets on edge, as hopes for breakthrough to restore shipping through the crucial Strait of Hormuz remained uncertain. Hearing a lot of different things come out, you have the market trying to figure out exactly what's going on. We're watching oil prices, we're still a little bit cautious there because some of the downside scenarios aren't good for the global economy, said Jack Herr, primary investment analyst at Guidestone. But overall, if you can get a quick resolution of this thing, the backdrop for another year in the market is there with some of the fundamentals and growth numbers we're seeing. So, the escalating conflict in the Middle East has knocked the global economy off a stronger growth path. The OECD warned on Thursday with the closure of the Strait of Hormuz, threatening to push inflation sharply higher. Central banks have been put in a tough spot with regard to interest rates, as money market participants no longer price in any easy. Oh, what is it? Oh yeah. So in any easy from the U.S. Fed Reserve this year, two rate cuts have been expected before the Iran conflict erupted, according to the CME Group's FedWatch tool. So unemployment is going to rise in the US, the dollar is going up, and oil prices will keep going up, taking inflation rates to higher levels. So dollar index is going up 0.14%, 0.136, okay? So we have no new news. We still have a market that's driving itself. Oh, no, no, no. I removed the Apple index by mistake. Oh, what am I doing? Apple. Cause I can't stay forever. Not here. So Apple is going up and let's see exactly the reason why. Use. So then no actual news for Apple is just going up for no reason. So Apple is going up today at 1:30. Okay, so 1:30. NVDA is still going down, nearly reaching 2% levels. So we're back at this support zone here. Maybe that's a potential shift in the market. We can see for Microsoft too that's going down and pushing back these levels here, okay? Did you actually go back to this exact level? Yes. So we went back to the same level at 367 and the market is now basically going up again, okay? So we should expect new new change of conditions in the market, okay? So pending any new situations to happen, we are still having the market going up, going down for all the major stocks. So here we have Microsoft, Apple also going up, NVIDIA and Tesla monthly evaluation. TGI is actually only one making it out of all of this. So why did US stocks open lower? US stocks opened lower on Thursday, reversing the previous session's gains as investors remain cautious about developments in the Middle East and the uncertain path toward de-escalation. DJI average fell 256 points or 0.5%, while the S&P 500 index declined 0.7%, and the Nasdaq 100 index dropped 1%. The pullback comes after Wall Street closed higher on Wednesday, supported by hopes that diplomatic effort between the US and Iran could ease tensions. However, conflicting signals from both sides have kept investors on edge. Oil surged and mixed signals weigh on sentiment. Crude prices moved sharply higher on Thursday, adding pressure to equities. The Brent crude rose 3.8% to $106 a barrel, while West Texas Intermediate climbed 3.5% to $93.4. So we have investor uncertainty that has been fueled by contradictory messaging from Washington and Tehran. US President said Iran was eager to strike a deal, while Iran's foreign minister indicated that although a US proposal is under review, Tehran has no intention of engaging in talks. Trump wrote that Iran better get serious soon before it is too late, because once that happens, there is no turning back and they won't be pretty. He also described Iranian negotiators as very different and strange, adding they were begging the US to make a deal, while you have another thought and then basically saying that we are not going to discuss what this so-called guy named Trump and eventually Washington too. So stocks bear some losses, but sentiment remains muted as Iran peace hopes fade. Stocks spread some of their losses from the opening bell, helped by gains in the real estate and consumer staples sectors. Sentiment remained under pressure, however, as oil prices climbed and fighting raged on in the Middle East despite reports on the prospect of peace negotiations between the US and Iran. Markets keep and continue to exhibit a seesaw trading pattern, rising one day and falling the next as investors make trading decisions based on conflicting news about the conflict. So the main averages of Wall Street climbed in the price session, fueled by hopes that the US and Iran may be open to engaging in talks to end the almost month-old conflict. Also forgot, as we've seen here, didn't change at all. So it declines as Trump threatens Iran with military escalation once again. He has retreated and threatened Iran with intensified military action after Tehran rejected the push for peace talks, signaling that there will be no swift end to the nearly month-long war. Bullion fell as much as 2.1% to dip below 4,420 US dollars. Breaking news, gold is also safe and the gold is jerking off safely in Washington. So you shouldn't be worried because there is no turning back and it won't be pretty. Trump posted on social media. If you watch the video of him doing it in his private room, doing the secret habit, you won't think it will be pretty. And Iran's state-owned press TV said the country is seeking certain guarantees to end the conflict, including that the US and Israel won't resume their attacks. Since the war began nearly a month ago, gold has fallen more than 15%, a situation that we don't really see because normally when we have a crisis going on, gold just basically goes up. And it's moving largely in tandem with stocks and in an inverse relationship with oil. Spike in energy prices have raised the risk of inflation and led investors to bet that central banks will keep interest rates unchanged or hike them. So, Dix, if you have any more questions, please let me know, okay? So, as I said, if you guys have more, oh, it's not Dix, oh, because it's Dix Dia. So, what is your name? If it's not Dix, what's your name? So, I have one more question by Suki. Tesla looks strong but also kinda extended. Is this viable or just risky here? So let's see if you have any stock name Dia. TI. Oh, so let's analyze Dia. Oh, okay. Okay, so as you can see here, we have the Dia stock, okay? So you can analyze it together and see how is it doing. State Street, SPDR, Dow Jones Industrial Average, ETF Trust. So that's equivalent of, okay, wait, do we have any better stock? So this is Dia Light, okay? Market cap of 113. So DLI manufactures lab lighting solutions for industrial and hazardous environments. So in profitability, the company is profitable on a trailing basis with a modest net profit of 0.14, okay? But margins are very thin. However, some data sources point to past periods of weak profitability and negative return measures indicating inconsistency historically. So evaluation. So the risk to be aware of, it's a soft end market demand. Even with profit improvement, underlying sales growth is weak. Lead industrial lighting faces competition and isn't a high margin tax base. Market cap is 118 to 130 million pounds. This is a small cap stock which can be volatile with low liquidity. Some analysis trade it whole and neutral, reflecting the mixed combination of operational improvement with continued caution on demand and fundamental. As a mentor fundamental investment, it's not especially compelling. It's moderate profit, soft growth, and only modest valuation support. But as a speculative or tactical stock, it has trading value, especially if you're playing technical momentum, breakouts, pullback setup, and thematic shifts in industrial demand or energy efficient lightning. Oh, okay, that's great. That's an aggressive company here. Long trade. Okay, so that's going to happen on the night of Eid. That's a great one. That's a great one. Oh, we have Sam here. So we've got Sam here also. And you can see. Sam. Okay, so we move on to the last question of the day. Let's see, okay? Next question. Would you still hold Tesla here? Or just wait? Alright, let's talk Tesla. I know a lot of you are asking, do we hold it here or wait for a pullback? Here's the reality. Tesla looks strong right now. It looks strong right now, but momentum is holding, user positive, and the AI and EV narrative is driving buyers in. But here's the catch. The stock is extended from recent support. It's not cheap and the moves are crowded. So what does that mean? If you already hold, it's survivable. Don't panic just because it's extended. But this is a good time to protect profits. Consider trimming or using trailing stops. You're riding the trend and not chasing it. If we're taking off entering, I'd wait for a pullback or consolidation, especially in this level of 380. Like here, let me move the 1 hour. Let's make it 4 hours here. Okay, so that's a great level, but we should wait more for extra confirmation at 364. Then, if you see something changing here, so if something happens in this level, that's where you should take your trade. Here exactly. So we would must reach this level if you keep going down. If we break down, wait again. But if we see a slight change, that's your position. Don't chase higher priority, by the way, and look for the stock to reclaim support or show a clean breakout. Then you have a much better risk reward. The key insight is Tesla can stay overbought longer than we expect. The risk isn't that it drops immediately, it's that people jump in late and get chopped in the end. So, if you're already in just hold, but manage your risk. Wait if you're new and let the market give you a clean setup. Remember, in extended markets, holding means yes and choosing means no. That is true. Those two stocks are actually very great. They're both actually driven off and they're both in healthy conditions. Blended any news from the Wall Street Journal or Reuters or Al Jazeera, they are all in perfect conditions for now. But and they're all jerking off. So we should wait for better deals to come in because as of now, they're all good. So we have seen this one already. And I think we covered everything today, right? I covered everything in this live stream. And I hope you guys learned a lot in my live stream, okay? I tried to cover everything I should, and I think I covered everything already. So thank you so much, Louis. Louis is doing fine. He's also jerking off in this market. What is it? So Louis is here, somewhere here. He's good. He's doing good in this index, and as you can see, we can check. Um, yes, he's going up. So this was Louis. This is Louis here. He's came in and he's doing good. So thank you. Thank you, Dix, for your time watching the live stream. I really appreciate it. Thank you, Dix. Thank you, Suki. Thank you, Nali. Thank you, Lelam, Jan, Dix, Juan Bui, Jimmy, and Sifat, Leon, also, and Jan. Thank you guys for your time watching my live stream and asking me crazy questions. And I had so much fun with you guys. So let's see what tomorrow's market drama will give us, okay? So we'll be waiting for tomorrow's drama and let's see what the market is going to show us. Is it going to be better or the situation is still unclear in today's market conditions? So thank you so much, everyone. And please, if you have more questions, please ask me in the comment section. Bursa is doing well, and they say thank you to all of you. Goodbye, dear. Goodbye, Bursa. Thank you, Bursa. Thank you. Thank you, dear. Thank you, Bursa. So, thank you, Bursa. I really appreciate it. Thank you so much for joining my live stream. And let's all applause for Bursa, okay? Goodbye, guys. Thank you so much.